Hey everybody, it's Bobby Nahum here with AMAC Real Estate Company. Hope everybody is having a great week and hope everybody's had a great first quarter of 2021. Here today to give you guys an update on the Tallahassee residential real estate market. We're going to be looking at how the real estate market here performed in the first quarter of 2021 compared to the first quarter of 2020. We're going to be looking at some real estate metrics and comparing those metrics from the first quarter of 2021 to the first quarter of 2020. And I'm also going to just give you guys kind of an update from the ground level, so to speak. Give you my perspective on how the market's doing just from my everyday working with buyers and sellers here in town. So let's get right into it. So before we get into the metrics, I'll give you guys an update on what I'm seeing out there in the real estate market day to day. So we are in a seller's market here, as you guys already know that. I'm sure you do. The demand for homes right now is very strong, and that's being fueled by very low interest rates and also by a recovering economy. We're having more jobs and things are kind of slowly getting back to normal. And that seems to be continuously fueling the need for buying homes. There's a lot of demand out there, a lot of millennials out there who are finally deciding to become homeowners. So all that has come together to kind of create a very strong demand for homes right now. But on the supply side, we are facing a major shortage in homes for sale. We have had a shortage of homes for sale for quite a while now, for at least a few years, but it has gotten worse. I'd say the supply of homes has dwindled down considerably more in the last few months compared to even where it was at a year ago. So this combination of very high demand and very low supply has created an environment where it's pretty tough for home buyers right now. Great for if you're selling your house, but if you're buying a home right now, it's a very tough market. What I'm seeing out there is, multiple offers on homes are very common. It's actually more uncommon to not have multiple offers on a home than it is to have multiple offers. The only time you really see homes selling that don't have multiple offers, it's if the house is overpriced or if it's a home that's in an undesirable area, or if the home's in poor condition. But if you have a home that's in good shape, it's priced right, and it's in a decent area, chances are you're going to have multiple offers when the house goes on the market. So the other thing that I'm seeing that's very common is homes are selling for more than the asking price. The homes are getting bid up above the asking price, and that's because of the multiple offers. You have buyers competing against each other, so it's driving the prices up. The other thing we're seeing is homes are selling very quickly as well. So sometimes, homes will only be on the market for 24 or 36 hours before they're under contract. So it's things are moving quickly. If you are selling a home, what I would suggest is that prepare your home to before you get it sold, get it ready to sell. You still, even though the market's really good, you still want to try to get top dollar for your home. But then also be prepared and have a plan for how to deal with multiple offers as well. It's important if you're selling your house, you need to anticipate how you're going to handle multiple offer situations so that you can juggle the situation to your advantage to where you can get the best offer and the most money for your house that you possibly can. Now, if you're buying a home, you need to do a few things. Number one, what I would suggest is make sure you have your pre-qualification letter ready, and also your proof of funds ready letter if you're paying cash for a house, like a bank statement or something like that, showing that you've got the cash to purchase it if you're buying with cash. And then also, if you are getting financing, try not to ask the seller for a lot of concessions. If you don't need the seller to pay your closing costs, don't ask for them to pay it. Don't try to push the closing date way out. Don't do anything that you don't need to, or ask for any concessions that you don't need that could put you at a disadvantage to other buyers. And then the other thing is, if you are getting FHA or VA financing, you might want to rethink that and try to go conventional financing, because um, VA financing and FHA financing are looked at negatively by sellers, because many sellers believe that those types of financing have stricter underwriting guidelines, and they do to a certain extent, especially when it comes to the condition of the home. So, since the underwriting guidelines are stricter for FHA and VA mortgages, sellers tend not to go with those if they have other offers, because they view FHA and VA finance offers as less likely to make it to closing. So, if you can do conventional financing instead of FHA or VA, that will put you at an advantage as well. And that kind of leads me into my next point on what I'm seeing in terms of who's winning the bids on homes and who's typically losing. Like I was saying, FHA and VA finance offers are usually the first to get tossed to the side by sellers in multiple offer situations. And the people that are usually winning the bids are either cash buyers or people who are getting conventional financing, and they are putting a large down payment. So they're viewed by sellers as strong buyers that are likely to make it to closing, less likely to have problems that may derail the sale of the home. So anyway, that's what I'm seeing on the ground level. So hope that helps. But now let's get into talking about the real estate metrics, the year-over-year metrics. So the first metric that we're going to discuss is listings. So, like I was saying, the number of properties listed for sale is extremely low right now. In the first quarter of this year, we saw a 13% drop in the number of properties available for sale compared to the first quarter of 2020. So that's a pretty big drop, especially considering we were already at a low level of housing supply a year ago. So now it's dropped even 13% more. So to kind of give you a perspective on how low our inventory is, we have about a 2 to 2.5 month supply of homes for sale. So in a normal balanced market where you have an even level of housing demand and supply, we would normally have about a 6-month supply of homes for sale. So we are under 50% of what would be considered an adequate level of homes for sale, or a normal level of homes for sale. So it's pretty low. And again, the low sales are or the low number of homes for sale are causing prices to go up, and they're making it very tough for home buyers right now. So the next metric we're going to talk about is number of homes that have sold. So in the last year, home sales went up by 11% compared to the first quarter of 2020. So in the first quarter of 2021, home sales jumped 11% from first quarter of 2020. So that's a pretty healthy increase in the number of homes sold. The strengthening of home buyer demand has been caused by low mortgage rates, which we're still hovering around 3%. I think it actually dropped down to below 3% for a 30-year fixed rate mortgage, which is historically very low. So that makes borrowing money and makes mortgage payments less expensive, so people can pay more for homes. So anyway, the low mortgage rates are part of it, and then also just the recovering economy in general. We've got more jobs out there than we did even just a few months ago, especially a lot more than we did in March of last year. And the consumer confidence is definitely back up from where it was during the pandemic. So all those things are driving home sales right now. So that's why we've got increasing number of homes that have sold over the last year. So the next metric is home prices. So with the low supply and the high demand for homes, you can expect home prices went up, and they did. We saw about an 8% increase in home prices from the first quarter of 2021 compared to the first quarter of 2020. So that's a nice increase in your home's value. 8% is a good increase. So historically, homes increase in value at about a rate of 3% to 5% a year. So anything above 5% is above average. So 8%, I would consider that very good. So if you're a homeowner, over the last 12 months have been good for your home value. So The next metric that we're going to talk about is what I call the sale price to listing price ratio. And that measures how much on average homes are selling for compared to the listing price. So to give you an example, if a home was listed at $100,000 and it sold for $98,000, the sale price to listing price ratio would be 98%. A year ago, the sale price to listing price ratio was 98.42%, and the first quarter of 2020, it jumped up a little bit, about 0.35%. It jumped up to 98.77%. So that is a very high sale price to listing price ratio, and it's indicative of the fact that we are in a strong seller's market. So buyers are only paying on average a little bit over 1% under what the asking price is. So that's great if you're selling a home. Maybe not so great news if you're buying a home. And then the next metric is the average number of days on the market that it took to sell a home. So we saw a 15% drop in the number of days that it took to sell a home in the first quarter of 2021 compared to a year ago. It took 60 days a year ago on average to sell a home. First quarter this year, it dropped down to 51 days. So that's pretty good if you're a home seller selling your home. And then the last metric we're going to talk about is what I call distress sales to total sales ratio. So this just measures what percentage overall distress sales make of total sales. So distress sales, it's good to look at this metric because distress sales typically suppress values. So if distress sales are going down, that's good. Distress sales are usually short sales and foreclosures, but they can be also other types of sales, including bankruptcy sales, tax deed sales, estate sales, sales from divorces. It's basically any sale where there's an outside influence that may reduce what the home would sell for normally in a normal arm's length transaction. So, but anyway, distress sales only made up 1.53% of overall sales in the first quarter of this year, and that's down from 2.02% in the first quarter of 2020. So that's good that distress sales are going down. So, but just to kind of conclude, that concludes all the metrics. But just to kind of summarize where I think the market's at right now again. So again, demand for homes, no problem there. We have very strong demand for homes. The issue is really on the supply side. And what we really need is we need more homes for sale. And if we had more homes for sale, I believe that the number of homes sold would even be higher than it is now. A lot of buyers, I think, are kind of like sitting on the sideline right now because they don't want to have to compete so aggressively for homes. So a lot of people are just kind of waiting it out. So I think if we had more homes for sale, we'd actually see more home sales than we have right now even. So in the months to come, I do think we will see a slight increase in the housing inventory levels. It's not going to be huge, but I think it will be. We will see a little bit of relief. And I think that's going to come from two sources. Number one, it's going to be new construction homes that are going to help relieve, give us some more relief with more homes to choose from. New homes are being built now, actually, at the highest level since the summer of 2006, which is great news. So that high level of new construction homes being built is going to give us some help. The other is that home prices are so high right now. A lot of homeowners who have been thinking about selling their home and maybe buying a bigger home or selling their home and downsizing are finally getting off the fence because of these high home prices, and they're putting their houses on the market. And I think that's going to continue more in the near future as homeowners start to realize how high prices are, and they're going to start trying to cash in on that. And you've also got a lot of investors who have owned properties as rental properties for a long time, and they're going to start selling their homes because of the fact that home prices are so high. So the new construction homes and homeowners cashing in on the high prices and selling their houses are going to help give us some relief. We're not going to be getting back to the normal 5 to 6 month supply of homes. It's considered normal and balanced for a while, but I do think we will get some relief. It's going to take probably years to catch up to get back to a 5 or 6 month supply of homes. What we're really dealing with is basically we've had 12 or 13 years before the last few months or a year prior to that, we've had like 12 or 13 years of underbuilding, gross underbuilding. So we've got a lot of catching up to do to get our inventory levels back, housing inventory levels back up to normal. So two things to look out for this year that could greatly shape the direction of the housing market. Number one is going to be tax changes, mainly tax increases or getting rid of tax loopholes for real estate. So there's been talk about increasing tax rates both at the personal level and the corporate level. So if that happens, that's gonna put a damper on home buying demand. People and businesses are gonna have less take home pay if taxes are increased, and that'll hurt the housing market a little bit. The other thing they're talking about proposing is an increase on capital gains tax. So capital gains tax is if you own an investment property or a second home, and you sell that home and make a profit, you get taxed at the capital gains rate tax. So that rate currently, depending on your income, is 15 to 20%. It's lower than most people's normal income tax rates are. So when you sell a home and get a capital gains tax, it's not going to hurt you as much as it's not going to be as high of a tax rate as your personal income tax rate. So they're talking about raising that tax rate, capital gains tax rate, up to 40%. And if they do that, then that's, or as high as 40%, then that could curb investment in real estate, which will hurt the real estate market and will hurt the overall economy as well. But the other tax increase or tax loop that they're talking about getting rid of, they're talking about putting a cap on the 1031 exchange deferment of capital gains tax. So 1031 exchange is basically you own an investment property, you sell it, you make a profit, and then within a certain amount of time, you turn around and you reinvest that money into another piece of real estate. And if you reinvest the money from the sale of your previous investment, you don't have to pay capital gains tax on the sale of that previous property because you've reinvested in another property. So what they're talking about doing is putting a cap on the 1031 deferment of capital gains tax at $500,000. So if you get capital gains, if you profit more than $500,000 from the sale of your investment property, then you don't get to defer that. So that could also, for the larger investors, medium to larger investors, that could curb investment spending, which could hurt jobs. It could curb investment spending in real estate, and that could hurt jobs. It could hurt the real estate market, and it could hurt overall jobs too, because those investments in real estate that these companies and investors are making also provide jobs outside of just the direct real estate transactions. So that's something to look out for. And then the other thing is the supplies for construction and building materials. We've got to increase the supplies that are needed to build homes, because what's happening right now is we're seeing shortages of things like everything from windows to siding to wood to roof shingles, paint, everything. All these supplies are basically low right now because we're building at such a fast pace, but also because last year we had closures worldwide and here in the United States, closures of factories because of COVID. And we're behind in production of a lot of these materials. So what you're seeing, and you're seeing delays in building homes because there's long wait times for things like windows and things like that, and it's slowing down the level of construction. And it's also driving up prices because there's not as many materials available. It's driving up the prices of these building materials. So if we can get the supply chain back up and running for building materials, it's going to reduce the expense of building new homes, and it's going to increase how quickly we can build the new homes. So that will definitely help with the inventory levels. So anyway, that's it. That's my first quarter real estate market update. I hope you guys have enjoyed it. If you all have any questions real estate related, feel free to message me. You can call, text. You can send me a message on my Facebook page. And then also, if you like what you see in this video, please like the YouTube video and subscribe to my YouTube channel. That'd be great. And hope you guys have a fantastic second quarter. And I will be talking to you guys here in a couple months. Thanks.